Next, we're going to talk about real estate financing. 5 expert tips to compare mortgage offers. When comparing different mortgage offers, it is important to consider both reliability and efficiency. You will want to make sure that you do not lose your deal if the bank pulls out and does not provide you the money that they have pre-approved you for. Here are some tips on choosing the loan provider with the best reliability and efficiency. First, understand your needs. Before you start comparing mortgage offers, be sure to understand what your needs are by identifying what you can afford to pay, what type of loan you need, and what are your long-term goals. Number 2, you're going to want to complete at least 3 or more applications. Submit your loan application documents to at least 3 different separate banks. Get a sense of the different mortgage offers, get an understanding of what the interest rates are and the different fees. Apply to at least 3 different bank lenders to find the best deal. Number 3, pull your credit for each application within the same 30 to 45 day time span. This will ensure that you're actually not getting your credit impacted by the pull as much. When you're in the purchasing process for a home, if you pull your credit within the same 30 to 45 day span, the credit pull will not impact your credit as much, and instead it will consider itself as a soft pull. So definitely be sure to schedule the bank pulls. So for instance, consider your budget and situation and your credit card situations and your balances, and choose to have your credit pooled by each bank on a certain day. That's what I recommend, and I enjoy doing that for myself. When you apply for a mortgage, the lender will pool your credit, and you can schedule the credit pool for a certain day to ensure that all credit pools occur within the same 30 days or 45 days, but you can also have the credit pooled to really optimize your application, because when you optimize your application, you can actually provide yourself the best loan deal and the best rates. So the impact of multiple credit pools is lesser when you pull the credit for the mortgage within the same 30 to 45 day span. It counts as a soft pull, and it's way better for everyone. Number 4, allow each to provide you their approval and loan details. You'll really want to get a clear picture of what each lender is offering and compare them based on the data. Also consider the reliability and efficiency of each bank. Number 5, choose the loan provider with the best reliability and efficiency, as you do not want to lose your deal if the bank pulls out. Thus, always maintain backup applications and apply to multiple banks. For one of my first purchases down in Florida, Disneyland area, I actually was purchasing and I did this exact specific thing. I had more than one bank, and I actually ended my job like a week before closing on the property, not realizing that it would impact my loan, and that was really funny because at that moment I had to choose to bring in a cosigner to ensure that I can purchase the property when I made the decision to change my income by ending my job. So the reality is, in that current situation, I was very lucky to have had multiple banks, because when I made that change in income and went to that cosigner situation, my bank no longer favored my application, and so I had to go with a different bank loan provider. And so you'll always want to have a backup just in case the loan doesn't go through with one bank. You can have a purchase go through with a different bank. Don't put all your eggs in one basket. When it comes to buying a property, you'll want to have a backup. You'll want to find the down payment that is lower, in my opinion, or best for you. Lowest fixed interest rates are the best, obviously, and you'll also want to try to find the lowest amount of closing cost fees. Other fees include origination fees and prepayment penalties. I would always ensure that you are not going to be penalized by paying off the property early. The best annual percentage rate, APR, gives you an accurate picture of the overall costs of the loan, and it is based on interest rate and fees associated with the loan. You'll want to ensure that you can pay the loan off early without any penalties. Some mortgage offers include prepayment penalties to pay off your loan early. Look for loans that allow you to pay extra payments without any penalty. Next, you'll want to choose the loan term. I recommend a 30-year loan term to reduce risks and reduce payment amounts. The way I see this decision between a 15-year or a 30-year fixed rate mortgage is if a recession or job loss or anything risky occurs, you have the situation in which you have a 30-year loan with the lowest possible monthly payment, which means that in hardship you're protected. You don't have to pay as much, and it's going to be easier for you in those hardships. Coupled with the situation of not having prepayment fees, you're able to literally take on the lowest possible payment amount every month with a 30-year fixed rate mortgage, but you're also able to make extra payments. So my favorite trick is to get a 30-year fixed rate mortgage, reduce your risks, and pay off the property early. And the best mathematical, most effective way to pay off the property early, when you understand how credit cards and compounded interest work, it's most definitely to make bulk payments. Don't pay off your mortgage early by paying extra $100 here or there. Instead, pay large amounts against the mortgage, because the larger amounts you're able to put, that will impact the mortgage interest more extensively and save you more money. So, my recommendation, 30-year mortgage, pay it off early if you want to pay it off early. So here are some miscellaneous tips. Definitely consider the bank's reputation, customer service, and track record of closing loans on time. Lenders should be responsive to your needs, and if they're not answering your emails, then it's not a good sign, and you should probably ensure that you have another bank that is responsive, that you're probably going to go forward with the purchase with. Look at online reviews and ratings from other borrowers. You can check the Better Business Bureau to see if any complaints have been filed against this company. I personally do not like Wells Fargo. I would go elsewhere. I do not do this level of research because I just want to buy, and I don't really care about all these details that much. For me, spending way too much time on all the intricate details can be an opportunity cost and take me away from pursuing other more important things. The way that I look at it is, if I do this level of research, sometimes I have an opportunity cost and I'm not able to focus my mind elsewhere. So, you can research to the level that you think best and implement all this to the level that's best for you. And, it really depends on your situation, but it's better to be informed and have the option to consider these things before and during the buying process. I just want to buy, and I will probably go with whatever they lend me because the way I see it, in the life of 30 to 40 years, I'm winning by buying, so I just think you should buy. Again, I don't really recommend buying super expensive properties because of the risk, but if you're buying the median purchase price or around it, then you are probably purchasing a safer bet with lesser risks. Now, I'm not a financial advisor, this is just information given online. I do recommend you going to a licensed professional prior to making any decisions or implementing anything you find online. I'm not a licensed professional. If you want to implement or take actions in your life, definitely be sure to go to a licensed professional, which is not me. Go to a licensed professional, which I am not, and seek a path forward for your specific situation by ensuring that that financial professional who is licensed provides you the best feedback for your situation. I do not know your situation, so I'm just giving you information, and if you want to take actions based on what you find online, I'm recommending you don't. Instead, go to a licensed professional that can assess your situation and provide you direction based on your specific situation. So, as noted, what is most important is there may be other information that is helpful to consider, but these are the top considerations for most people. What is most important is not getting the best deal. Instead, what's most important is the fact that you achieve the outcome of purchasing the property that you're looking to purchase. It does not matter if closing takes forever or the details are not the best. Instead, what will impact your life the most is the outcome of actually buying versus never buying. Regardless of the fees and the costs, you will almost always win in the long term of the next 30 to 40 years or more. When you buy a property below the median, you're reducing risk, and when you're buying properties with cosmetic repairs instead of major repairs, you're further reducing risk and really enhancing your situation. Just buy. This buy will impact the rest of your life, and a property can survive over 100 years. So the fact of the matter is, if you pay it off within 30, the life of a home can be over 100 years. I have a property purchased in 1900 that is almost 124 years old. This means that if you literally buy a property and pay it off in 30 years, the next 90 plus years of its life, if it is a new construction property, you can literally get almost 100 years of value in that home. Consider this. If you construct a brand new construction property, if you get a new construction property built today, pay that off within 30 years, the next 90 plus years of the house's life is paid off. So it's a win. Like, the math always works. Just buy. And the reason why we just don't see it is because usually humans live that 100 years. The reality is the home will probably outlive you. And the mortgage is only 30 years of your life. And that's the difference. So you get to have the property 50 plus years with zero mortgage. And zero mortgage payments can really be impactful. You always win, and you should definitely buy. Do not rent. Just buy. Thank you so much, and I'll talk to you all soon.